In this video, I'm going to be showing you guys the best lower time frame entry model that I have found. This incorporates sweeps, momentum, and inverse fair value gaps to find an entry. The reason I love this model so much is because it's very mechanical. You're waiting for step 1, step 2, and step 3, and it has a very high win rate due to the fact that we are waiting for multiple things to align on our charts before we enter the trade. I also think this is a very beginner-friendly entry model. It's not super difficult to understand. I'm currently working on an indicator for this exact entry model that will be available inside of my Discord pretty shortly here. I'm sure you guys are going to find a lot of value on this, so make sure to watch this until the end. Let's jump into it. As always, for the examples I'm going to be showing you guys, I'm going to be using some trades that I had called in advance, as well as some other real-time setups using this entry model. Now, I call this model the manipulation model. Now, first things first, you need to have a higher time frame bias, okay? This doesn't have to be anything crazy, but you want to have higher time frame key levels, higher time frame fair value gaps, higher time frame golden pocket fib levels. Keep these levels in mind. I've already made videos on how to find a higher time frame bias. So in this video, I'll strictly focus on the entry model itself and exactly what to look for. Now, the craziest thing about this entry model is that like it literally on its own has like a 65 to 80% win rate, anywhere in that ballpark. Okay. So step number 1, you are going to be waiting for a low time frame sweep of liquidity. If you have a higher time frame draw on liquidity as well, that's even more confluence. Ideally, you should probably have both. So a sweep of a lower time frame liquidity level and also a sweep of an external liquidity level just for more confluence. But again, we're just gonna be focusing on the entry model. So this is what it will look like. Okay, that is step number 1. Now, step number 2, you are actually going to be waiting for price to go below this level. What we are trying to do is catch this manipulation move here, hence the name manipulation model, once price reclaims this low. To do that, we actually use something called inverse fair value gaps. So as price is sweeping this low here, we can see that we formed a bearish fair value gap, right? This is the most recent bearish fair value gap on a 5-minute time frame with 1 bearish candle, 2 bearish candle, and 3 bearish candles. And in this gap in the middle here, between that first and the third candle is going to be your bearish fair value gap. Now, what a lot of people will teach is wait for price to respect, meaning react from this bearish fair value gap to enter a short position. We are actually going to be doing the opposite. What we are waiting for is for price to close above that bearish fair value gap, invalidating that bearish order flow and targeting higher prices. An absolute textbook A+ setup. This move right here should happen within the span of like 3 to 5 candles. In this scenario, we had like 15 to 20 candles before we actually inverse that bearish fair value gap. But ideally, you want to see a sharp V-shaped reversal with a pretty obvious bearish fair value gap. This bearish fair value gap isn't great. It's decent looking. I'd rate this like a B+ setup, to be honest. Because my higher time frame bias at this time was bullish, I maybe would have taken this. Now, what most people get wrong about the manipulation model is 2 things, right? They don't wait for the price to close above this fair value gap, above that most recent low that we had swept. Meaning, if we saw this same exact formation with, let's say, a bearish fair value gap right here, and price inversed and closed above the bearish fair value gap, but still below this low, we will not take the trade. We need to wait for a reclaim of the low that we had swept in confluence with that inverse fair value gap. And last but not least, step number 3 is I use the momentum. Okay, so I use this momentum oscillator here. I want to see a buy dot or a bullish divergence. It doesn't have to be on the exact same candle that inverse this bearish fair value gap, but anywhere within this whole manipulation move here, I want to see a buy dot. So for example, we got a buy dot on this candle right here. Again, according to our model, we're not going to just blindly enter the trade here. We want to wait for price to reclaim that low with that inverse fair value gap, and that is where you would take the trade. Normally, how this model works is you would place your stop loss below that bearish fair value gap. In this case, you would have been stopped out. Each trade has its own context behind it. Because this bearish fair value gap is slightly smaller, personally, I would have put my stop loss at this low here, okay? I don't want to see price make a lower low after inversing this bearish fair value gap. So I would put my stop loss at this low. You want to be targeting, in this case, we have an equal high here, which is a perfect take profit. Anytime you see an equal high, meaning one high and then a second high, either at that same level or slightly lower, this is a really good piece of confluence to enter the trade because we know that liquidity moves markets, and this is a huge liquidity zone up here that we can target as our first take profit. So you'll notice that in this model, there's not that many indicators involved. Like, yes, I like to use higher time frame levels as well, higher time frame fair value gaps, higher time frame golden pocket fib. You can still incorporate that. This is just for finding an entry on a lower time frame. All right, real quick, guys, if you want access to the indicator that I'm developing based on this strategy in specific, then make sure to join the free Discord. I'll put the link on the screen here. It will also be down in the description below. You will get notified for first access to when my new trading algorithm is out. So everything I'm showing you in this video will be done automatically. All of the levels, all of the inverse fair value gaps, all of the alerts will be done completely automatically by our trading algorithm. So all you have to do is load in the indicator, see if it follows your bias, and enter the trade. Let's jump back into the video. All right, this is another really good example here, okay? So step number one, we have our sweep. I'll mark that as our sweep. Again, I'm just pretending like I already have my higher time frame bias in mind. This was a higher time frame level that I was looking at, higher time frame consolidation level here. So I was looking to take longs on a lower time frame as price retraced into this zone. We had a sweep of this low here. We also had a sweep of this low right here. So two sweeps of liquidity. Then we have this bearish fair value gap right here. Price closes below, reclaims this previous low that we had swept, closing above that bearish fair value gap, creating an inverse fair value gap with bullish divergences. So this would be your entry right here. Stop loss at somewhere around here. Move to break even at the most recent high. So you'd move to break even at a 1 to 1.2. We didn't have any sort of equal highs to target here. So this isn't, a total A+ setup. Maybe this was a stop at break even, but you're probably going to hit at least a 1 to 2 here if you're trailing your stop loss, or maybe you take partials at this order block right here. Again, we have another example right here. We have a sweep of liquidity. Let me just copy paste this, right? Sweep of liquidity right here, sweep of this low. This is the setup that I would take, 10 times out of 10, okay? You have this very clear bearish fair value gap, very large bearish fair value gap. This is the kind of move that you want to take. This is what I would consider like an A+ setup. In this scenario, right? We sweep this low with this massive bearish candle down, and within like 5 candles, we end up inversing this bearish fair value gap, creating an inverse fair value gap, closing above. You can see this candle actually closes above this previous low that we had swept, and we had a bullish divergence with a buy dot on this candle right here, telling us that this whole move is most likely manipulation and we can target higher prices. And then we're going to be targeting this high here as our take profit. So this was another winning trade using this method. Another trade right here. Again, I'm just on a 5-minute time frame. You can use this on anywhere from, a 1 to 5 minute time frame I find works best. Again, we have a sweep of this low right here. Right, sweep of liquidity, step number one. Again, our bias is still bullish here. We are also at our golden pocket fib level here on a lower time frame, which adds more confluence as well. This is going to be our liquidity sweep, creating a bearish fair value gap, obvious bearish fair value gap on the way down here. Right, 1 candle, 2 candle, 3 candle with that bearish fair value gap. Buy dots indicating that price is oversold. And then we immediately inverse that bearish fair value gap on this candle right here on the 3-minute time frame. Stop loss below that bearish fair value gap. And in this case, we actually do have an equal high up here that we can target. Probably a break-even trade on this one, to be honest. Maybe you held through this drawdown a little bit, but this is a very confident setup. I would have just kept my stop loss where it is and targeted this equal high for a full take profit, another 1 to 5 risk to reward. Again, just using sweep, reclaim, inverse fair value gap with buy dots on a lower time frame. Now, I've just shown you a few different long examples, but obviously this works the same way for short positions. This literally just happened last night. Okay, we had a sweep of this liquidity level up here. This is also at a higher time frame resistance level, so that's why we would be able to take this trade. Mark out our sweep, right? Clear sweep of liquidity. Sell dot and bearish divergences on the oscillator. We obviously closed below this high that we had swept. All we're waiting for now is that inverse fair value gap, which we get on this bearish candle. Stop loss close above, move to break even at the most recent low. And we have an equal low down here that we can target as well. So that was a nice 1 to 3 risk to reward ratio on a short position this morning. We have some bullish fair value gaps on a lower time frame, right? Comes below, again, clear bearish fair value gap right here. Inverse this bearish fair value gap on a candle closure right here. Stop loss around here. And again, targeting this equal high up here as full take profit. Again, 1 to 4 risk to reward ratio. I'm just showing you guys the entry model, okay? Obviously, more stuff goes into this. You need to be using other forms of higher time frame confluence, but as far as the entry goes, this is what you want to look for to enter the trade. Again, some more examples just from this morning, okay? We're back down to a higher time frame support level. Sweep of liquidity right here, okay? Sweep of liquidity. Instantly reverses. We have this nice bearish fair value gap. Bullish divergence on the oscillator on this candle. So now all we're waiting for is for price to close above this level, which we do right here on this candle. Stop loss around here, equal high right here that we can target either as our first TP, or we can target this high all the way up here as our second TP. Again, almost a 1 to 4 risk to reward ratio. Again, maybe you want to take a scalp short position earlier this morning. Okay, same thing, sweep of liquidity. You can see bullish fair value gap that we would mark out. All we're waiting for now is for this to get inversed. And as soon as this gets inversed with that bearish divergence, which confirms on this candle right here, we would enter the trade. So that is it for the manipulation model. This is a really, really good lower time frame entry model. Make sure to try this one out for yourself. Like I mentioned earlier in this video, I am working on an algorithm currently that will be available inside of my Discord for all of you guys to use. So not only will it have alerts for everything that I've just showed you, it will actually mark out everything in real time. So all you have to wait for is for the signal to flash on a lower time frame, see if it follows your daily bias and your higher time frame confluences, and then take the trade. So that's going to do it for this video. If you guys have enjoyed or found value, make sure to leave a like, subscribe to the channel for more trading content, and I'll see you guys next video.